I would like to start this video today by thanking all of you for the great comments and the interactions. This is a platform for all of us to learn. Our topic today is a very interesting one: how to make money with a short sale. C2C is a real estate mentorship community. All we do here is talk about your finances. We talk about real estate. We understand it is at the foundation for your family's success. What is a short sale? A homeowner sells his or her property for less than the amount owed on the mortgage. Why a short sale? The coronavirus has brought in so much hardship and suffering to so many Americans. By the time we are over with this, there will be a lot of people who will be having problems, with making payments on their mortgage due to loss of jobs or one other issue. You will have to call your lender and tell them you want to apply for a short sale, because the lender has to approve before you can do a short sale. The approval process is the simple fact that the lender will accept to sell the house for less than what you owe. Sometimes you may find yourself where you're underwater, is a term in real estate, which simply means you owe more than what your house is worth. So it'll be worth it to sell it on a short sale. One of the biggest advantages of a short sale is that it is an alternative to foreclosure. Rather than wait until they foreclose on your home, it is better for you to do a short sale. What is the short sale process? You have to apply with your lender or your bank, and you have to show proof of hardship. The lender has to accept the short sale. Accepting means the lender accepts they will sell the house for less than what you owe. You now have your agent list the house as a short sale. Once your agent gets offers from potential buyers, they have to submit that offer to the bank for approval. Why would you consider a short sale? What are the benefits? Number one, it's a voluntary process. You call the bank and tell them you want to apply for a short sale, as opposed to a foreclosure, which is the legal action to take over your home. A foreclosure is involuntary. You have no control over it. Number two, it protects the seller's credit score. When you are in short sale, it's always a good thing for you to try as much as possible to keep making your payments until the short sale is over. After the short sale process, your credit score will drop about 50 points. After a foreclosure process, your credit score will drop anywhere from 250 to 400 points, depending on whether you were making any payment during the process or not. And most of the time when we are in foreclosure, most of us do not make payments. So you expect the worst when it comes to your credit. A foreclosure would take about 7 years before you could be able to apply for another mortgage. No amount of brokerage fees is involved with a short sale. The bank or lender takes care for all the fees. Traditionally, when you're selling your house, you're looking at brokerage fees from 4% to 6% in commissions. In a short sale, the bank takes care of all of that. Number five, you can still buy a home within 1 or 2 years, depending on your credit situation. Number six, to me this is the most important, you avoid the embarrassment of vacating your property. You vacate your property on your own terms. You don't have sheriff come to your home one day with a big truck and they have to pack everything out. That's an embarrassment to you, your family, and your neighbors. Sometimes in a short sale, you can negotiate with the bank or the lender and stay in the property until the process is complete. And at that time, you can move out. So it gives you some kind of peace of mind. These are some of the benefits for a short sale for the seller or the owner. At any time, the bank or the lender will prefer to do a short sale than to do a foreclosure. Foreclosure, it requires too much legal jargons, requires too much fees. The lender will be losing much on a foreclosure than with a short sale. What are some of the disadvantages of a short sale to the seller, the owner? Number one, there's no cash out. In other words, there's no equity. Once you find yourself in a short sale, everything you've paid in that house as equity is gone. Because the lender is just trying to recover whatever money you owe them. So it's like same situation like you were paying rent. It needs lender approval. You may not be approved for the short sale. That's why it's good for you to apply for a short sale as soon as you find out you're facing difficulties, rather than wait until it gets to that point where foreclosure proceedings have already started. The earlier, the better. You will have to start from scratch if you were to buy a new home. Because of zero equity, everything paid is gone. You have to start saving money from scratch if you're thinking about buying a new home. Maybe the lender may impose a short sale fee for this transaction on you, the seller. On a short sale, most of the times, the lender, after the sale, will send you a Form 1099-C, which is a debt cancellation. This debt cancellation will represent the amount of the loss that the lender has incurred. Let's say, for example, you owe $200,000 in your mortgage. The lender, in a short sale, was able to sell that home for $150,000. The difference of $50,000 will be reported on a Form 1099-C debt cancellation. And when you file your taxes at the end of the year, you have to report this $50,000 here as income. And you have to pay tax on that. Whatever is the difference between the sales price and the amount you owe to the lender will send you a Form 1099-C. In this case, it will be $50,000, and you have to report that as income when you file your taxes. These are some of the disadvantages for a short sale to you, the owner, in this case, the seller. The biggest winner in a short sale is the buyer. And that's why our topic for today says how to make money with short sale. In a short sale, the buyer purchased a home on a discount. So you are entering that home on day one with instant equity. In the previous example I gave, where the owner owes $200,000, the bank was able to sell that house for $150,000. So you, the buyer, you buy that home for $150,000. So you, on day one, you're moving in with $50,000 equity. That's how you can make money on a short sale. Most of the time, we do not do our due diligence. Let's look at some due diligence factors here. For the buyer, first thing you need to do, ask your agent if the short sale has been approved. Because a short sale that has not been approved will frustrate you. Sometimes it can take forever, 4, 6, 7 months. So if I were you, I would ask my agent, has this short sale been approved? Because once it's approved, then it takes anywhere from 30 to 45 days. Find out from your agent if there is a short sale company involved. Sometimes, besides the bank will let a short sale mitigation company to handle the short sale on behalf of the bank. And the short sale mitigation company will charge the bank a fee, and the bank will pass on that fee to you, the buyer. Most of the times, it's about 1% of sales price. In the case where there is no third party, where is the bank or the lender handling the short sale, you may not have to deal with this fee. Find out how much the owner owes on that property. Your agent can find out that information, because that information will determine your equity margin. It will also give you an idea on what to offer for that property. But if you don't know how much the seller owes, it will be difficult for you to draw a margin on your equity. In case the house needs repairs, make sure you get a contractor to get you a pro forma invoice on the items that need to be repaired. That pro forma invoice will help you determine what we call ARV, after repair value. Very important. The buyer is the big winner on a short sale. What are the disadvantages for you, the buyer? Number one, you have to wait for a very long time, especially if the short sale has not been approved. Number two, a short sale fee, usually 1% of the sales price. Number three, a short sale may not be a good idea for first-time homeowners because they may have to wait for too long a time, and this sometimes causes frustration. It kills the excitement of home ownership. When people are getting ready to buy their first home, there's too much excitement going on, and sometimes a short sale can kill that excitement. In a short sale, you are buying as is. All the repairs are on you. The lender is already losing money. They cannot go and start repairing anything in that property for you. So that's why it's very important that you get a repair estimate on a pro forma invoice, and that will help you determine what offer to make on that property, so you can determine also your average repair value, thereby having an idea of what kind of equity you'll be getting moving into this house in case that your offer is accepted. Short sale is one of the ways to make money in real estate, but you must do your due diligence. As a buyer, you're the winner. Banks, on an average, they make 22 to 24% more money in a short sale than in a foreclosure. Foreclosure is a nightmare to the bank. Here, as the parties involved in a short sale, there's a seller who's the owner, there's the buyer, and the buyer here is the winner in this whole process. There's the lender, who's the bank, Sometimes there's a short sale mitigation company. Why would you want to use a short sale mitigation company? Number one, after a short sale, there are taxes you have to pay on the unpaid portion of the loan. Remember, we talked about the lender sending you the Form 1099-C debt cancellation. You have to report that as income and pay tax on it. Under the IRS Debt Relief Act of 2017, it allows for unpaid principal on your primary residence to not be a taxable event. A short sale mitigation company will help you enforce this with the lender. Sometimes in a short sale, you may come to a situation where you have to deal with IRS liens. The owner of the house is owing the IRS. Homeowner association liens. The short sale mitigation company will help you to pay these liens. How would they do that? Case where you have two loans on your mortgage, what they will do, they will talk with the first mortgage holder to provide funds to be able to take care of these liens. That way you're not coming out of your pocket to pay for these liens. Sometimes the short sale mitigation company may work with the lender to provide you, the seller, some relocation assistance and give you some small money for you to be able to relocate to wherever you're going to after the short sale process. So sometimes it is a good thing to involve a short sale mitigation company. This is how you can make money with a short sale. C2C Mentors is a real estate mentorship community. All we do here, we talk about real estate, we talk about your finances. We realize it is at the foundation for your family success. Thank you. If you have already subscribed to our channel, please make sure you hit the like button. Make sure you hit the notification button so you don't miss our videos every Friday. Thank you and see you on our next video.